Okay, so we're going to look at our trade today in GBPUSD, GU, for our trade, which gave us a 2R here for another $2,000 profit. And so we're going to look at all the things that we were considering and all the things that we were looking at, why we got into this trade. And so before we look into GU, I just want to focus our attention on the dollar index. And the dollar index, if we go to daily time frame in the dollar index, we see that we are going back into this area of liquidity here in premium pricing above 0.5 Fib, with that being our swing high and this being our swing low. That happened during the month of April. And so we see that price came back up with this bullish order flow going up into this area of liquidity in premium pricing in the dollar index. And we see a reaction of price reacting to that liquidity with a change of character, but of course we see that there was a internal liquidation as well, followed by change of character, and that gave a new and valid area of supply in the 4-hour time frame. And if we refine this and go to the 2-hour time frame, we see that price actually on its way up created this very big impulse up with these large candles reacting to some news that happened last week that was good for the dollar. And we see that price would now go into a retracement back into those fair value gaps in that higher time frame. When we were looking at this, we anticipated that price would go lower and sort of target this area of discount pricing just for it to be in a relatively strategic position for the CPI news this coming Wednesday. And so with that bearish order flow that we see in the dollar index, automatically we looked for longs on the GBPUSD. And so on GBPUSD, we go on the daily time frame and we see that GBPUSD has actually just reacted from liquidity with this being the swing high and that being the swing low, went into premium pricing above 0.5 Fib. And we see that liquidity was now swept. Within that, if we refine to the 4-hour time frame, we see that not the best liquidity swipe. This was the target that we were looking for that to be swiped, but nonetheless, price broke out of that and made and changed that bullish order flow into being bearish. And so, as in my previous video, I mentioned that I was short on the British pound because of their political instability, because of their trade deficit, and several other things that is also evidently seen in the price action in the British pound. We see that the last buy before the sell was situated over here, and that big sell-off came again in line with that positive dollar news that happened last week. And so at this point, we were looking for some reactions, as when it came down, it also sort of went to this area of liquidity over here with this swing low that acts naturally as a level of support and resistance. And so we were looking for a counter trend trade, more of a pullback, mean reversion pullback trade back into liquidity for this to continue moving lower. So we were thinking that it would go up and then down and continue to follow this bearish channel that was being portrayed here ever since it reacted to liquidity in premium pricing on the daily time frame. And so when we saw that it also created a 3 touch point trend line here, we sort of had enough confluences for us to take that counter trend trade for us to look for any longs back into liquidity on the upside. And we see that reacting to that level of support on Monday, early Asia session, we see that fake out into the upside when price went up there, trapping those early buyers. And then on Monday, London session, we see those early buyers getting liquidated, and we see that internal liquidation over here. After that, we were looking for a change of character that would happen, and we see that change of character. Let me remove that right there. We see that change of character happening over here, and we see that price is now ready to move towards the upside at that point. And so we entered, and now we were targeting those areas of liquidity if we go to the 30-minute, and we see those descending highs being made on that impulse down. And so we were targeting sort of those descending highs for price to react to any of those before coming down. Now it was only a matter of risk to reward. After we saw that change of character, we got in on the 2-hour time frame, and we put initially our risk was below that 2-hour demand. But then when we saw that tap back into that 2-hour demand, we saw that price broke out of that with that change of character, and we managed our risk there and put our risk just below that new and valid area of demand in the 2-hour time frame over there. And so we see that this is a new area of demand that was made from another area of demand, and so that gave us confidence to continue holding this trade and continue waiting for that price to come up. And so we see that around London session today, we see that aggressive move up into our TP there. And for the reason why we did not target this liquidity that was sitting over here is because if we look at the 2-hour time frame, we see that there was also a trend line being made in that bullish order flow going up. We see that trend line being made over here. We got that 1, we got that 2, and we got that 3, potentially 3 touch points for that trend line. And so for us, that is a mature trend. Price has a tendency to reject off of these kinds of trend lines, especially that we are on a counter trend trade. And so with those 3 touch points, we opted to get out and not wait for price to go up here into that liquidity, as there is major red folder news coming out tomorrow for the US dollar.